This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to take a look at Monday's trade action as we get into the final week of July, we say hello and welcome in our good friend DuWayne Bosse of Bolt Marketing joining us here today. DuWayne, great to have you on the show, sir. I hope you're doing well.
Oh, yeah, absolutely. Thanks for having me, Jesse.
Well, we got plenty to talk about here, DuWayne, and I think just for starters, a really solid day across the board in grains. Bean meal ended up kind of being the bullish star of the show, leading beans, but all three, corn, soy complex, wheat, all strong. Good way to come back and start the week, and there's a lot of issues, of course, out there. It feels like a lot of this kind of got started with the weekend news about Russia, Ukraine, that bombing of Odessa. That seemed to maybe give us a little bit of that bullish momentum, at least to start here with the weekend headlines, DuWayne.
Yeah, it did. Yeah, as you mentioned, Friday we signed this deal with Russia, Ukraine, that they're going to allow exports out of the Ukraine, right? And the whole time I was thinking, there's no way. And but sadly, there's come Saturday, actually, I think it was just hours afterwards, they ended up bombing Odessa. And now, there's talk of, it wasn't, the area where they actually ship grain. It was where they brought in some missiles from the U.S., but whatever talk. But kind of frustrating because it felt like I knew that would happen. But to trade the wheat market on Friday, you just got rolled over like I did because it was down hard. And then this news breaks over the weekend. But back to your question, and yeah, that's what started the rally last night. So it's nice to see. I think all the grains kind of took their turn at leading this up today. It was wheat overnight. Today, I'd say the wheat close is a little disappointing. It up only 10. And then, like you said, soybean meal really was strong all day. Soybean oil fell back, but then corn kind of rallied into the close too. So they all kind of took their turn. I don't know, Jesse, if it's really a huge bullish story going on, or is it just for once the funds then step in and sell? I guess we'll figure that out in a few days here.
I think we will too. And looking at how things unfolded over the weekend, it was kind of the case of the haves and the have-nots again. So I don't know if we could point to weather necessarily being the reason to move to the upside, but there were plenty of areas that did get a nice rain and plenty of areas who didn't get much in the way of any rainfall that needed over the weekend, DuWayne.
Yeah, you're right. And no one's getting heavy rains. Boy, you sure don't hear of anyone being too wet. So everyone's, even if you get the rain, you're just getting spoon-fed enough to kind of keep going. Yeah, there's obviously, this time of year, it's thunderstorms, so you get it or you don't. We got a nice rain up here in northeast South Dakota, so I feel like we're sitting good. But I know southeast part of the state has been hot and dry really all summer and missed out here. Now, this week, we're looking at cooler temps and rains going across Kansas, Nebraska, southern part of Illinois. So that'll be a nice change for them. They've been hot and dry as well. But yeah, it's going to be interesting to see a lot of hit and miss areas out there. But also, you look at the calendar. I heard you mention, last week in July, which about floored me, but it is. So that kind of closes the book on really the weather season when it comes to the corn market. Even if we end up hot and dry in August, the corn market doesn't like to rally after the July timeframe as far as a weather market anyway.
Well, and I've heard some of the same things you have. You mentioned parts of Southeast, South Central, South Dakota, Nebraska, Kansas, Missouri, Southern Missouri. Some of these areas that, especially Missouri, Kansas, into Southern Illinois getting rain this week, but is it too little too late with some of that corn crop? I'm very curious to see Monday afternoon's crop progress report to see if there are major reductions in some of those areas. But, seeing the pictures on social media and hearing from guys and gals, some of that corn crop just got met at the wrong time with pollination and all that heat, and it's not looking the best, DuWayne.
No, it will be interesting this afternoon. Late last week, you start talking to people in the trade. We're thinking maybe a 3 to 4% drop in the crop conditions. And then I saw today the trade estimate is 1% drop. And so it might be a little bit worse than that, I would sure think. But it's It's so hard to gather. I do a crop tour every Monday morning, and the reporter out of Illinois and Iowa both were talking about above trend line yields for those two states. Well, that alone, I guess, Jesse, is enough for me to stay bearish and keep hedges in place, because those are two huge states, and it's just a math thing. If they're both planting over 11 million acres of corn and North Dakota's at 3 million, it wouldn't matter what size crop North Dakota has, of course, to pull it down. So I agree with you. We're not going to have a 185, 186 national corn yield. So the top end's been taken off with these troubled spots, but yet it feels like if Iowa and Illinois are that good, then we're not going to have a disaster. It's not 2012. I don't think we're looking at a 172 for national yield. I'm in the 177 to 180 range for now, but maybe the crop conditions will change my mind this afternoon.
Yeah, well, and you mentioned, maybe still a little bearish, keeping some of those hedges in place. I mean, we look at the market right now, the futures, kind of that 580, 590 range, some 570s. So, I mean, you look at that, DuWayne, what are your thoughts here? Do you think we found our range maybe? Do we hold steady here? Does the market have a chance to run lower? Especially if Iowa and Illinois stay really, really good.
Right. Probably yes to all of the above. It's possible. I'm looking at 590 as an area we might bounce back up to in Dees corn. We had an opening print there last Thursday, and that just kind of feels like a good spot to maybe go back and test. And then after that, to me, will be the true test of this market, I guess. Are we going to go back down and make new lows because we got some more expected rains in those key states we mentioned? Or, like you said, are we finally creating a bit of a sideways pattern down here? And it's possible. When you think of the seasonal tendencies, it's down for this week and maybe the first week of August. Then we start to, believe it or not, we've been trending to form a harvest low earlier and earlier every year. And it wouldn't surprise me to form a low here. We might, about a week from now, I might be to the point where it's just time to exit hedges. Not that I would proclaim to be a crazy bull at that point in time, but just maybe we're not going to sell off anymore. But for right now, the funds are still long, close to that 100,000 contracts of corn, about 70,000 contracts of beans. And today was a nice day and an even better close, but I'm going to still go on the fact that the funds are probably going to liquidate here. Maybe we hit that 590 and then go back down and sadly probably make a new low.
On the soybean side, we entered in the month of August. There's talk of hot and dry weather again, which is, gives us that key time frame for beans, and that's, where the weather market still presumably sits. I've heard from other growers, though, that some of them here the last week or so, they're more worried about their soybean crop than they are their corn crop. Have you heard some of that as well, DuWayne?
I've heard a lot of that, especially today. A lot of people, the corn looks good, but beans are just, they were planted late, they were mudded in, vice versa. And maybe we're in that kind of ugly stage of bean development. But yeah, I've heard that from more guys. But that's also the crop that none of us can really call. I mean, I'm a producer, and until that combine rolls, I couldn't tell you what kind of beans we have out there. I can tell you up here we need a really long growing season. They're way behind. But, we get late August rains, and then all of a sudden we get a bigger bean crop, and then we can still probably go down. Beans are the one that has a wide range in front of it yet throughout this month of August. Like you said, we continue to stay hot and dry. I think we can rebound back up. But boy, if we get some rain in the forecast, then you mix in this China's economy is struggling a little bit. And we're starting to question how much will they really buy next year. You could take $1 off this and be all the way down to $12 for soybeans. I don't know if we do that or not. I think the funds are completely liquidated out once we get below $12.50, and they're there again. Then I might not be a bull, but I'd probably exit hedges at least and just go to the sidelines.
What happened with bean meal and oil today? A little bit of, not a little bit, a lot of spread there, a lot of strength in the meal market. Did you see anything that stood out to you today, DuWayne?
I didn't see any news that stood out to me. Normally when I see something like that, I'm going to hear information out of China that, their crush margins are positive. Well, no, it was actually the opposite this weekend. An article I read, maybe it was the fact that this is spread unwinding. Remember when this whole started, it was palm oil going up and that had soybean oil going up. So guys are buying soybean oil and selling soybean meal, which is really the opposite of what a spread we usually do in bullish times. But if they put those on and now they're thinking, gosh, all this talk about Indonesia now, they banned exports and then figured out, oh, whoops, we have too much now. So now they're trying to get rid of it. So maybe people are unwinding these oil meal spreads here. So it might not be a new trade. It might be just exiting an old trade here.
On the wheat side, let's talk there, DuWayne. I know we have the Wheat Quality Council Spring Wheat Tour going on in the Northern Plains this week. That gets going really tomorrow and goes through the week. So we'll get a good idea what the spring wheat crop looks like. And I would have to think that may be an outlier event into the trade this week. But again, I think this comes back to the Russia-Ukraine situation is where we're seeing some of the strength. Plus, too, maybe we just overdid it to the downside with the sell-off.
Oh, I think there's probably no doubt there. I mean, we've retraced this whole rally, didn't we? And, the Russia-Ukraine war, the futures market is kind of a hurry up and give me a story and then give me the next story type trade. And we rallied up so sharply and then found out, oh, wait, we didn't export any wheat because our prices were too high. Now we're headed into a time, to me, where the Russia-Ukraine war is actually very interesting and very intense as far as we might really lose some actual global production. And now the market doesn't care. It's an old story and the funds have completely sold off. We're having harvest here in the Northern Hemisphere, of course, so that's putting pressure on the market. I think that spring wheat tour is going to find a crop that's very delayed, but very good too, and quite a few acres planted. So we probably have a little bit more downside there, but overall, months from now, I look at wheat as actually being the first commodity to lead us higher here during the winter months because, boy, that Ukraine story there. It sounds like now, I read an article that had some Russian combines now being moved in and equipment and harvesting Ukrainian wheat, which kind of makes sense. I mean, this is war. That's what happens is they literally want to take over the country. So this whole Ukrainian-Russia wheat signature deal for exports, I'm afraid it isn't going to be Ukrainian grain. It'll be Russia grain leaving. But maybe the trade's just viewing it as, well, whatever, it's still grain getting out and into the public. But that's going to take a long time. So, yeah, I'm a little depressed we couldn't rally wheat higher. Come Saturday, there was talks of limit up wheat. And so, I mean, it's funny, up 19 to 20 is not a big day in wheat anymore. But it really isn't right now, is it?
No, it is not. It's still a good day, but maybe not as good as we thought it could have been. DuWayne, on top of you being an analyst, a trader, you're a farmer as well. I'd love your perspective on this. Last week we got the news about the ITC case, fertilizer imports from Trinidad, Tobago, Russia. And it seems like fertilizer prices have been going down and down. I know that's another big component here in just the market trade and just our bottom lines in general. I mean, what are your thoughts as you sit back and look at fertilizer? I'm hearing a lot of producers still saying they're going to wait to see and not buy anything for some of those fall needs or next year. But I know it's still the cost of inputs, especially fertilizer, heading to 2023's crop is a big deal right now.
Yeah, it is a big deal and going to stay that way. 2023 is probably not going to be the profitable year 2020 at least was or had potential to be when prices were highest, right? But Brazil never did put sanctions on Russia, and they kept buying fertilizer there. And guess what? Now we're talking about Brazil expanding acres quite largely. Now, it was still expensive fertilizer there, but they're backing off and waiting too. And like you said, we're waiting here. So I do think fertilizer prices continue to dip a little bit. Are we going to get back to pre-war levels? Absolutely not. That's just, it takes time to get that. But not a fertilizer expert, but I guess what I would do is, and I think farmers are going to do this, they're going to do the same thing they normally do. They'll get into fall and they'll start booking it and feeling a little bit better about it. But I got a bad feeling at that time we might be looking at the D23 corn crop price and be a little disappointed and go, geez, well, $5 just isn't the same as what it used to be. But that's usually what we deal with in agriculture, right? We don't have profits in front of us all the time. Otherwise, everyone would do it. So.
Well, another thing on the energy side, and this goes back to what's going on with Russia, the Nord Stream pipeline here today. Russia's Gazprom said they're cutting gas flows from 40% to 20% now, and as soon as Wednesday. So you think about that. Natural gas, I know, was higher today. We think about here in the U.S., if we got to dry a lot of this crop this fall, what's natural gas prices going to look like? I think that's a concern as well, DuWayne.
That is a concern, and really that's where probably a rally comes from this fall, is the fact that Putin's probably still going to make this war kind kind of a war with using food and fuel as weapons, and that's probably what he's starting to do there, and also with bombing over the Odessa port. I don't think he has any interest in letting any food out or gas out. And you get to this winter, Europe's going to cry pretty hard if they don't get enough electricity and gas from Russia, right? That's why some of their sanctions are already being dropped. So I hate to say it, but this is kind of playing out the way Putin actually wants. It's working in his favor. He's winning the war right now, sadly. So, yeah, we're going to have some expensive inputs here, no doubt about it. And, I don't think anyone really locked in propane at a good price because it was so high already as we got into this year. It's just, we're going to have to hope for a late fall, I guess, and a warm winter. That would help the most. But just when you hope for something like that, it probably doesn't happen.
Let's talk livestock here, DuWayne. Friday's cattle on feed report, cattle inventory numbers, cold storage numbers. We've had a chance to digest those over the weekend. I was a bit surprised that fat cattle held in with some strength here today. Feeders, higher corn prices. Okay, we've seen that dynamic time and time again, but I was surprised at the strength in live cattle today, DuWayne.
I was too. It was great to see. I think like any bull in this market, we were just a little bit disappointed with those reports. I mean, it's still a bullish report. The inventory is dropping, on feed is still at 100%, but placements were down, but they just weren't as sharp as we anticipated. I mean, there was some talk placements could be down 10%, and I didn't think we'd be that lucky, but it seems like this market is just set up for a bullish trend here. And we kind of got the reports out of the way. We sold off on the opening and somebody was right there to buy it right away. And if you look at the commitment of traders reports, the funds have started to build a little bit more of a long position, or starting to build a long position in feeder cattle. And, the trade action really suggested that the last 2 weeks, and plus in live cattle too. It sounds weird to talk recession and then think that the cattle market can rally, but I think it can. And that goes back to hand in hand with the pork market. Man, our pork cutouts in that cash market is just on fire here. You see restaurants really featuring pork more, and that has to do with chicken prices being really high too. And it's just strong domestic demand right now, and exports for livestock, the beef side, are very good too. So nothing but bullish comments from me from this market. Love the way it performed today, and I think we have more of that down the line here.
And I think as well, to add on with the hog market, DuWayne, it just felt like those front months, some profit taking here was needed, and maybe looking to try and fill some chart gaps that we have there. But I don't know if we're going to fill those completely anytime soon.
No, but I love the fact that you brought up there are a lot of gaps in those front month hogs and kind of all over the place. So some selling off there isn't a surprise, but I would be definitely afraid to really be short the market looking at a technical point, thinking that you're going to fill some gaps because the cash market is just so high. I would just kind of stay out of that, look more at the deferred contracts maybe and see. And, and then it's the same with maybe the feeders. I skipped over that a little bit. I know they, like you said, they were down today, but we're also maybe ahead of cash just a little bit there. We've been anticipating all this bullish news coming, and when it didn't come in one big swoop for reports, I think we had to pull back a little bit. But yeah, the hogs, I just follow the cash and cutouts, and as long as they're strong, I think you got to stay friendly to these markets. But we were overbought and needed a correction, and I think that's all you had today. But look at the bear spreading, down in the front, up sharply in the back, and so no, I think it's still a strong market.
Well, DuWayne, before we run out of time as well, any other final thoughts? We didn't touch on the Fed, the outside markets. We know we have the Fed meeting this week and expecting that 75 basis point increase. But I think the trade, for the most part, maybe has that factored in already just because it's been talked about so much.
Maybe we do, but it'll be interesting to see how the grain markets handle it, because we talk about it in the Fed meetings that in the past have come out when they raised interest rates exactly what we thought. Actually, the grain markets took it fairly hard, almost like it was just a sell it after the fact type thing. But you look at things like the Dow and the dollar. So the Dow has probably made their low about almost a month ago and kind of come up. And same with the dollar. We're still at a high level around that 106, but we're still off the highs. So it looks good. You look at some of those equity markets, it actually looks like maybe we've started to stabilize and maybe a big recession isn't coming, or if a recession is coming, it's going to be very short-lived, which would be good for commodities in general. But I don't know. The fact that the Fed is having a meeting this week kind of makes me think I'd rather be a bear on the grain side, just assuming that we sell off again. If we get through Wednesday, they raise it to 75 or a half basis points and we don't fall apart, then maybe it's starting to be old news then. We'll see come Wednesday night.
We will definitely see that. Well, DuWayne, I appreciate the time as always. If folks need some advice with their marketing, I know they can reach out to you there at Bolt Marketing very easily. How can they get a hold of you?
Yeah, they can call us here directly at 605-448-2365, or they can always check us out online at boltmarketingllc.com.
With that, DuWayne Bosse of Bolt Marketing, always a pleasure, sir. Have a great week. Thanks so much, and we'll talk to you again soon.
Sounds good. Thanks, Jesse.
DuWayne Bosse with Bolt Marketing joining us today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.